Let's take a clear look at what's unfolding around Iraq's currency and why this period matters more than most people realize. The conversation around the Iraqi dinar has shifted noticeably. What once centered on guesses and noise has moved into a phase shaped by planning, coordination, and institutional action. As we move through the final months of 2025, attention is turning toward how Iraq's financial leadership is aligning internally and externally. The Central Bank of Iraq has been working closely with global financial partners, and these relationships are now more visible than before. This matters because currency reform does not happen in isolation. It requires trust, oversight, and systems that meet international expectations. Recent public acknowledgement of cooperation between Iraqi financial authorities and the U.S. Treasury signals that years of behind-the-scenes work are reaching a level of maturity. This recognition points to progress in areas like banking oversight, compliance controls, and foreign currency management. These are not cosmetic steps, they are foundational requirements for any large-scale monetary adjustment. Over the past several years, Iraq has focused on strengthening its banking framework. This includes tightening controls against illegal financial activity, improving transparency, and stabilizing how foreign funds move through the local market. Seeing these efforts formally recognized suggests the groundwork for the next phase is largely in place. Looking ahead to early 2026, many analysts are watching for signs that smaller denomination currency could be introduced. While no official launch date has been confirmed, discussion has increased around the possibility of new notes appearing near the start of the new fiscal year. Preparing for such a rollout is a complex task that involves secure production, logistics, and coordinated distribution across the country. This type of preparation does not happen quickly. It requires long-term planning, testing, and coordination with banks and businesses nationwide. If new notes are introduced, it would mark a major change in how people handle money in daily life. For years, Iraq's economy has relied on large value notes, which can make even simple purchases cumbersome. Carrying thick stacks of cash increases errors, slows transactions, and complicates record keeping. Smaller units are designed to reduce these problems and make everyday commerce smoother. At the center of this discussion is a process known as redenomination. This is an administrative adjustment where zeros are removed from the face value of currency to simplify pricing and accounting. Under such a change, a note currently labeled with a very high number would be replaced by one showing a smaller figure, while the real buying power remains the same. It's important to understand that this process does not, by itself, make the currency stronger or weaker. It changes how values are expressed, not what they are worth. The goal is efficiency, not instant gains. To understand the impact, imagine a shop owner who currently deals with large bundles of cash for routine transactions. After a redenomination, prices would be listed in simpler figures, cash handling would be easier, and bookkeeping would become more manageable. This improves speed, accuracy, and overall efficiency for businesses and customers alike. This is why redenomination is often confused with revaluation, even though they are very different. A revaluation involves an actual increase in a currency's value compared to other currencies. That kind of change depends on long-term economic strength, productivity, reserves, and confidence. Redenomination does not alter international value, it only simplifies domestic use. A true rise in the dinar's strength would come from sustained economic growth, stronger institutions, diversified income sources, and stable reserves. When these fundamentals improve, demand for the currency tends to rise naturally. For Iraq, a stronger currency would help reduce the cost of imported goods like food, medicine, and electronics. Since imports play a large role in daily life, even gradual improvements in currency strength can ease pressure on household budgets over time. However, none of these reforms can succeed without controlling inflation. If prices rise too quickly, the benefits of simpler denominations disappear. That's why any currency adjustment must be paired with disciplined monetary policy and responsible government spending. Public confidence is another critical factor. Even if a redenomination is technically neutral, people need to trust that their savings will not lose value. In a country with a history of economic instability, skepticism is understandable. Clear communication is essential. Authorities must explain how changes work, what people should expect, and how savings and wages will be handled. When information is consistent and transparent, fear and misinformation lose influence. Trust also encourages people to use banks rather than keeping cash at home. This strengthens the financial system by increasing available capital for lending and investment, which supports broader economic growth. Another topic gaining attention is the possible return of coins. For many years, coins have been absent from daily use because inflation made them impractical. Their reappearance would signal confidence in price stability and long-term planning. Coins are durable and useful for small transactions. In a cash-based economy, the lack of small units often leads to rounding prices upward, slowly increasing daily costs for families. Coins allow for precise pricing and reduce wear on low-value paper notes. Producing and distributing coins is not simple. It requires investment, material selection, and a careful rollout. Businesses and consumers would also need time to adjust after years without them. There is also a psychological element. A population unfamiliar with coins may initially resist their use. Public education and cooperation from retailers would be key to successful adoption. If integrated properly with broader currency adjustments, coins could become a symbol of modernization and stability rather than inconvenience. These changes fit into a larger effort to update Iraq's financial system, reducing reliance on physical cash, improving banking services, and aligning with global standards are all part of building a more flexible and modern economy. A streamlined currency supports digital payments, mobile banking, and electronic transfers. These tools are essential for reducing dependence on oil and encouraging growth in other sectors. The Central Bank of Iraq plays a central role in this process. Beyond issuing currency, it manages reserves, oversees banks, and regulates foreign exchange. In recent years, it has reworked how foreign currency is distributed to improve oversight and credibility. Stronger supervision makes any future currency transition more achievable. When policy is consistent and control is clear, confidence grows at home and abroad. For businesses, a simplified currency reduces operational strain. Cash handling becomes cheaper and safer, and planning becomes easier. Companies that adapt quickly to new systems are often the ones that benefit most. International investors are watching closely. Countries that manage currency changes smoothly often gain credibility and attract long-term capital. For Iraq, success would support infrastructure rebuilding and industrial expansion. These reforms also have social importance. Stable purchasing power helps low-income families the most. Ensuring fair access, especially in rural areas, is essential for maintaining trust and stability. Timing matters as well. Currency changes are closely linked to national budgeting and fiscal planning. A more efficient currency supports better wage payments, tax collection, and spending control. In the long run, the dinar's strength depends on economic diversity. Agriculture, manufacturing, and services create real demand for local currency. Monetary reform provides the foundation, but growth comes from productive sectors. As early 2026 approaches, expectations are rising. Any rollout of new notes or coins will test logistics, communication, and public readiness. A smooth process would build momentum. Problems would require fast and clear responses. Beyond the technical side, there is a human element. A stable, well-designed currency can change how people view the future. It encourages saving, planning, and investment. It becomes a shared symbol of progress. Iraq is not moving forward alone. International partners continue to provide guidance and oversight, helping ensure reforms meet global standards. These relationships add credibility and support long-term development. In closing, the potential adjustment of Iraq's currency structure represents a turning point. These steps aim to simplify daily transactions, reduce inefficiencies, and strengthen the foundation for future growth. They are not a quick fix, but they are an important part of building a stable and trusted financial system. Staying informed and focused on verified developments is key. As this story continues to unfold, clarity and patience will matter more than speculation.